Hi traders, good morning. Welcome to this video on the euro dollar and pound dollar. My name is Chris from Elite Currency. I'm back. Sorry I had to miss the second video of last week, unfortunately, because of health reasons, but should be fine for this week. So let's take a look at the markets now together and see what the euro dollar and pound dollar are up to. All right, so euro dollar is retesting the previous bottom, and there might be an head and shoulders level here in play. Left shoulder, head, right shoulder. But let's see if price reacts to the 107.50, 108 zone. I would say keep an eye on daily and 4-hour candles to see if there's any response. If not, it could just keep falling towards the previous bottom. If we look at higher time frames, we haven't looked at the monthly chart actually together. Last week I didn't have the second video. So yeah, that was a doji with a big wick at the top, big wick at the bottom as well. Massive volatility, of course, in March, as we know. So that low, though, the candle low, did hit the 88.6 fib, or came very close to it in any case. So this could be retesting the previous low, but it could also still just tag that 88.6 fib because it did miss it by a few pips. So I think downside pressure is certainly visible and certainly could continue down to potentially 106 for the moment. If it breaks that, of course, down to 105. Let's take a look at the weekly chart. We see a lot of zigzags back and forth, a lot of false breaks, break down, break up, break down, break up. So yeah, a lot of volatility here. Not difficult to make sense of this in a way from this perspective. And we got a bearish candle last week. So for the moment, I think there is bearish pressure to be expected. But there is a fair chance that this support zone here on 10, let's put a fib actually on that candle. There we go. That 107.50, 107 could be kind of a support zone to reckon with, or at least to be aware of. So if you're in short positions, I would personally aim at 107.50, max 107. And I wouldn't be looking to necessarily short if it gets into this zone. I think that's not that good. But if it does break through the zone, if it breaks through the 88 and the previous bottom, that makes a flag. There is some space down to 106 and 105 perhaps. Very small space. It's a bit tough. Best maybe would be a small retracement and then a continuation down to 107.50. Let's see if we can get that maybe on the lower time frame. A 4-hour chart. Let's check that. There we go. All right. So 4-hour chart, we had a pretty strong momentum up, but pretty hefty downside as well. Now making a bear flag. If that bear flag breaks, if it goes into the 21 EMA and bounces, there's maybe that chance for price to go down to the 78 or 88.6 fib. On the other hand, if it breaks through the 21 EMA, makes a pullback to the 20 EMA and then bounces, then this bearish swing could be over. This could be an ABC. That's completed. We might be in a bullish swing and upside. Honestly, I think it's not my favorite type of environment. I'll be very honest with you. I don't see any particular clear favorite at this moment. Just keeping it real here. And, I wish that I had all the answers for every scenario. This is one where I really don't have any particular favorite, or I don't really like the situation here. So I'm just sharing my 2 cents. But it's maybe not as valuable as other times. I'm sorry for that. But, in this particular case, I'm not really jumping for joy to trade the euro dollar. I think that at this moment, there is likely to see, if I had to take a trade right here, I would still choose for lower, for downside, put the stop loss above the 20 MA and probably aim for the 88. It would be best if it went a little bit higher into the 20 MA and bounced from there, aiming at these targets like that. Then let's see if we get a bounce at these fibs, or if price goes sideways and then continues to break lower and continues to show bearish pressure on the euro dollar. This remains bearish as long as it stays below the 20 MA. If it breaks above the 20 MA, that would significantly change perspectives and the 144 MA, and there might be another bullish swing, and there could be this in play. Up, correction, and up to the minus 272 target, roughly at around 112.50, 112.75. That's the best I can do at this moment with this environment. Pound USD, bullish engulfing twins 2 weeks ago. Last week was small inside candle, bearish but small. Monthly chart, it has a big wick at the bottom, has a wick at the top, closed bearish, so not a doji like the euro dollar. it is a bearish candle. That said, there's also quite a massive wick at the bottom. So let's take a look at the daily. Big downside, big upside, and now some kind of flag, as we can see, that is respecting the 20 EMA zone, but not moving away from it at this moment. So it seems, again, quite a situation where we had super big volatility, price flying from 132 down to 115, then up to 125, and things are like calming down a little bit finally. And with calming down, it's still, a question of a few hundred pip movement from 125.50 down to 122, sorry. But that seems like a small movement in the current perspective. Anyhow, at this point, moving averages are on top of each other. I would say a break below 122 should see some follow through to the downside here. And we could put a fib from here to here. And there could be a move down to 120.80, which is the 38.2 fib. Let me do that correctly, 1 second. Sorry, 120.75. Maybe down to 119.50, which is the 50 fib. And there could be some bearish pressure here to retest one or all of these fibs. I'm not sure how much pressure there is, but it could be testing these fibs and falling and breaking and falling. One of these fibs might also provide support at the flip side. So in this particular scenario, specifically, I would say the 61.8 fib could be something to keep an eye on, I would say. That seems like a pretty useful level always. It's a golden ratio. That's the downside break, right? Just keep an eye that all these fibs could be bouncing spots and support. Upside does not really look that interesting to me, but it could. I mean, I would expect a retest of the previous bottom first myself, but I mean, it could be a 1, 2, 3, 4, 5. So in that case, sorry, I just deleted the pound. On a 4-hour chart, I would probably need to see a good breakout candle. Then on a lower time frame, maybe like an hourly chart, would need to see a break, pullback, and bounce pattern around the 20 EMA, and aiming at the -272 target as a max 127.50. Might not get there fully. Beware of 122, 122.50 as well, but it could go all the way there even. So, no, sorry, those are the wrong numbers. Excuse me. I meant, apologies. I meant 126.50, 127.50. All right, these Wiz levels are correct Wiz levels, but not showing the right price levels. Sorry for that. So that could be a 1 hour kind of intra-week upside break pullback continuation, whereas with the downside need a break here, pullback and continuation down to these fibs. And let's see which of these fibs could be the bouncing spot maybe for a bigger correction, which I think is still likely at this moment. I would think that an ABC pattern like that is most likely at this moment. But of course, obviously, if price keeps breaking these fibs, then maybe there's more bearish pressure than I imagine, and it could be retesting the bottom as well. So just keep an eye on those fibs for bounce or break spots. They could be both, right? But if I had to make a bet here, I would say that most likely the 61 or the 78.6 fib, one of those two, is likely to be a bouncing spot for some rally, such as at least retesting the previous top, if not going up to the -272 target. So at this moment, I would say that a break like this, down to this or this fib, is the less likely bounce to retest the previous top, or go to the -272 target, which could be resistance spots. Tricky environment, but this is, the best 2 cents I have at this moment. In any case, wish you all great trading. I'll be back on Wednesday, maybe more clarity on that, at that moment or at that time. And trade safe. All right. Cheers. Bye-bye.